From the data center boom to rising semiconductor spending, gold breaking over $4,000, and even a surprising bankruptcy shaking up private credit. It's been a busy week in the market, so let's dive in. Welcome back to Navellier Market Buzz. Ed Yardini pointed out that spending on new data centers is soaring. What are some of the best stocks actually profiting from this boom?
Yeah, you're showing a chart of just how dramatic the spending is. And we want to remind everybody you can expense 100% of your plant costs. So a lot of people are rushing to, get the footprint for these new plants out there. The only problem is there's not enough power. So we may build the plants before we can hook up the power to them. But, well, of course, we're expanding the power grid immensely. But the best stocks involved with the data center boom are AGX, which we've talked about before, Bloom Energy, BE, MCOR, EME, GE Vernova, which is a spinoff of GE, and they're involved in all kinds of energy things, the green energy as well. But there's a 5-year order backlog for their natural gas turbines. Siemens also has a 5-year order backlog, and Mitsubishi has sells turbines as well. Then I really like Power Solutions, that's PSIX. I like Quanta Services, PWR. I like UI, which is a stock that's speeding up the fiber optics in the data centers. And then I like VRT. So those are all good data center plays, and they will be continuing to profit from this expansion.
While we're talking about Yardini, he also showed that semiconductor spending is steadily rising. What companies are really benefiting from that trend?
Well, that's interesting because AMD surged this week because OpenAI says they're going to be building data centers with AMD chips, even though the AMD chips are inferior to the NVIDIA chips. But, it's just a sign that when it comes to AI, they want to include everybody. But the best ones, in my opinion, are NVIDIA, of course. The big news on NVIDIA is Cantor Fitzgerald put a $300 price target on it. It's under $200. So that's very, very encouraging for NVIDIA. And then, of course, I love Supermicro Computer, which is one of NVIDIA's biggest clients. Technically, it's not a semiconductor, but Supermicro's is installing the NVIDIA chips on their water-cooled rack systems that go in the server farms. Those are two of my best ideas to profit from the semiconductor boom.
And you recently did a short video about how gold crossed over $4,000 per ounce, which, by the way, if you haven't checked out, Louis gave us 10 new stocks, gold stocks, that I will link that video in the description. But, Dad, what's driving that move right now?
Well, it started with the Japanese prime minister. This is the fifth prime minister in the last 5 years. The new prime minister, she wants to spend a lot of money, and that's going to neuter the Bank of Japan. So the Japanese yen fell, and the Bank of Japan will not be able to shore up interest rates. And all Japan has to have very low rates because of its incredible debt burden. So that was the first thing that knocked it down. The chaos in France is also not helping. The third prime minister since 2024, just last year, resigned. He was only prime minister for 3 weeks. And normally, when you can't keep the prime minister to negotiate with parliament for the budget in France, normally you have to declare an election. But Macron decided that he's going to try a fourth prime minister. So there's been a fourth prime minister in the past year. And it probably won't work because Marie Le Pen controls parliament, and she wants to cut spending and things. And so it's going to be interesting to watch. But yeah, France is dysfunctional right now. And of course, I was in Washington, D.C. this week, and the government's shut down. Although they still have quite a bit of traffic. So I was a little confused by all that.
And the First Brand's bankruptcy is causing a bit of grief in private credit. Can you explain what's going on there and why it matters?
Yeah, this is becoming a bigger deal, and I need to kind of explain what this is all about. So we've had some companies that are involved in private credit blow up, but this is a big one. First Brand sells to AutoZone, Napa, O'Reilly Auto Parts, Walmart. And one of their creditors says that $2.3 billion of receivables has disappeared. So, Justice Department investigation was opened. This is going to be a mess. And the companies that are exposure to this are Jefferies. Another one is UBS. And so what's been going on is individual investors go to broker dealers and they get paid up to 11% on private credit. And now that some of the people behind private credit are imploding, the question is, will it filter down to these people that funded it? And we don't know. But I guarantee you the private credit market is freezing up right now. And it's going to be hard for them to raise capital, no matter who they are, because this is a big, big deal. And that is unfortunate. And this wasn't the only issue. A few weeks ago, we had Tricor Holdings, which was subprime auto loans. They went straight to liquidation, another bankruptcy that interfered with the industry. There was a company called Black Book Asset Management. Now, this one was a little different. This was this was leveraged bets on treasuries. Apparently, they were leveraged up to 11,000 to 1. So they had to be using all kinds of kinky derivatives. Citigroup and Goldman Sachs have exposure to this. Now, treasuries are very liquid, so hopefully we'll see if this is an issue. So I had an opinion piece in Barron's about how I'm bullish for the rest of this year and next year. I believe I forecasted 8% gain in the S&P in the fourth quarter, an 18% gain in the S&P for 2026. I said bearing, provided there's no black swan event. So what a black swan event is where credit markets go down and lending stops, and that of course hurts economic growth. And that's what happened in 2008. The stock market didn't implode; the credit markets imploded. So this is a big problem. Um, so we'll just have to see where this goes. Now, there's supposed to be assets securing all these loans, and hopefully they can find all the assets, and it won't be as big a deal as we fear. But the fact that the Justice Department got involved on the First Brands bankruptcy is a big problem and is scaring a lot of people.
Let's move on to some big names reporting this week. Let's start out with Domino's. Will investors be hungry for more, or has this stock lost a little flavor?
Well, Domino's sales are supposed to go up 5.2%. Earnings are forecast to decline 5%. They do have positive analyst revisions, but they missed last quarter. So we will see. I think they put cheese in the crust. It is football season. Pizzas are very popular for football. So we'll see how they do. But I have very low expectations because the earnings are forecast to decline. But if they surprise, I take it all back.
ASML, is this chip giant still staggering wins, or are investors finally hitting a pause?
Well, ASML is a very important company. This is a lithograph company. It's based in the Netherlands. And all the high-end chips, like the Navellier chips, need the ASML equipment. Their sales are forecast to rise 3.8%. Earnings are supposed to go up 1.5%. There are some negative analyst revisions, but it has a good earnings price history. Now, this stock's not strong enough for me to recommend it, but it is a market leader because, again, if you're going to build a new chip, a faster chip, the chips they put on all the Macs and the iPhones and the new Microsoft Surface laptops, and of course all the NVIDIA chips, you need the ASML architecture. So that is a big, big deal. But again, their sales are not strong enough for me. I hope they surprise. It would help lift the entire semiconductor sector.
And TSMC, the crown jewel of semiconductors. Are we going to have positive earnings?
Yeah, TSM's sales are forecasted to rise 26.8%. Earnings are forecasted to go up 37.1. They have positive analyst revisions and a very good earnings surprise history. So this company is onshoring in America. They have a huge plant in Gilbert, Arizona. Obviously they make the finest chips out there, like the ones that we were talking about earlier. And but they are part of the onshoring efforts, and they are it. I mean, they dominate the high end chips in the world, and so I'm expecting great things from them. I do not have the stock in managed accounts yet, But if they surprise, I wouldn't be surprised if I end up adding it.
Now, United Airlines, are investors flying high or could turbulence be ahead?
We'll see. United sales are forecasted to be up 3.1. Their earnings are forecasted to decline 19.5%, but they have positive financial revisions and they do have a good earnings surprise history. And of course, they have good hubs. Now, one of their hubs near you is controversial, which is Newark. They had to cut the number of flights. Chicago is obviously a very formidable hub, as is Denver and San Francisco, Houston Intercontinental. So they have more hubs than most airlines. So they should be doing pretty good, but let's just see what their guidance is going to be. Weather does impact these companies quite a bit, but I think they'll be okay. But again, their earnings forecast to decline, so I won't pick up on it until the earnings are growing.
And lastly, American Express, can Amex keep charging forward or is the spending spree starting to cool?
It looks okay. Their sales are forecasted to go up 8.5%. Earnings are forecast to improve 14%. They have steady analyst estimates and they have a good earnings surprise history. American Express went through a reorganization for a while. I'm happy to see them come out of this with improving results. I do not recommend any credit card companies at this moment, but I wouldn't be surprised if I pick them up. The credit card companies don't have any credit risk; they just are basically processing things. So American Express is a very, very well run company, and so we'll see how they do.
Dad, do you have any financial stocks that are on your radar currently?
No, but they're all going to announce next week. Citibank, J.P. Morgan, Wells Fargo, and this is a big deal because we want to see what their loan loss reserves are. One is, do they have any exposure to this private credit mess that we discussed earlier? Are they making the reserve requirement? Are they putting money aside for bad loans because consumers are stressed right now? So that's really what we want to see. J.P. Morgan is the flagship of the entire industry. It's perceived to be the best run company. Their chairman, Jamie Dimon, is very grumpy, and so he can scare people from time to time. But I don't recommend financial stocks. They're mostly value stocks, and I'm a growth manager. So they don't really fit. And I am an ex-banking analyst, and I used to do bank accounting, and it kind of scared me for life, just the way they do things. I choose not to recommend financial stocks, but let's hope they give upbeat guidance and then it'll help the market turn around.
Now let's answer some subscriber questions. One of our subscribers wanted to know what your thoughts are on Enbridge.
Yeah, we must have smart subscribers because that's an A-rated stock. But that is a pipeline company. It's got a 5.6% dividend yield. You would buy that stock for the dividend yield, not for the underlying sales and earnings. Yeah, pipelines are a big deal, especially in Canada. The Canadian Prime Minister Carney is all of a sudden a pro energy, even though he's a net zero guy. I think he had to keep Alberta happy. So most Alberta oil, of course, goes to the U.S. because that's where the pipelines are. But they might be expanding the pipelines up there in Canada to go out to the West Coast. So that's but it's a very well run company, and it's one of the flagship pipeline companies out there. So it's A-rated. But again, it's predominantly a dividend stock. So you just buy for the dividend yield.
And lastly, what are your thoughts on?
That's Stride, and that's B-rated right now in our stock grader. But when I looked at the fundamentals, I liked what I saw. So let me give you some details on that. Their sales are supposed to be up 11.7%. Their earnings are supposed to be up 34.3%. They have positive analyst revisions from $1.03 90 days ago to $1.26 recently. That's a big upwards analyst revision. Last quarter, their surprise was 21.4, although their surprises seem to be somewhat erratic. So this company is looking pretty good. Again, I don't own it. I'm not recommending it, but it ranks well in stock grader, and it looks pretty good when I check it out fundamentally. And so hopefully they'll have a great holiday shopping season, and they'll do well.
Well, excellent. That's a wrap for today's market rundown. Keep the questions coming in the comments and let us know which companies you're watching. And don't forget to like, comment, and subscribe. And stay tuned for our next video update. Thanks so much, everyone.